All right, everybody, back with another smashing guest for the Crypto Hedge Fund Summit. We've been, we've had such a jam-packed summit so far and a lot of good interviews. And we've got Matty Greenspan here coming at you to talk about quantum economics. That's the name of his company. So yeah, Matty, welcome to the show.
Thanks a lot for having me.
Yeah, we're really excited. You've been on the pod before. That's one of my favorite episodes. We've done a lot of cool stuff in the past. So tell us about real quick, what kind of work you're doing at Quantum Economics?
So Quantum Economics is a firm for analysis, advisory, and money management.
So we're recording this just towards the end of May. What are you seeing going on right now, and what are you writing about?
Well, just about everything, really. I mean, I usually try to put in some kind of puff piece right at the top, something for fun, and then in the middle we get into Federal Reserve and central banks and government stimulus and how those guys are affecting things, and then usually we talk about crypto, what's going on in the crypto market. So today, I don't know if you read about this guy who found a loophole in the DoorDash system. DoorDash had registered his friend's pizza shop, and basically they were charging $16 per pizza while he was charging $24. So basically, he ended up doing pizza arbitrage and making $8 on every single pizza that he ordered from himself. He obviously didn't say how much pizza he ordered, but I thought it was an interesting microcosm of the entire economy, where you just have these big players coming in like Uber and WeWork, and what their business model seems to be is disruption at all costs. So they pay millions of dollars, billions of dollars just to acquire as many users as they can, even if they don't have a sustainable business model. And they go, okay, but the business model will come later. We'll get profitability later. But you don't realize that what you're actually doing is you're really hurting the businesses that are already there, because they're forced to compete with somebody who's using imaginary numbers as their accounting, right? A regular pizza shop couldn't possibly compete with somebody who's losing money on every single customer. So this is basically the effect of free money in the world, and far too much of it over the last 10 years. And we see it in a major way now. COVID-19 caught everybody by surprise, and that just basically exacerbated the situation in ways that we'll only be able to grasp in years to come, I think.
So when you're thinking about actively managing a portfolio, what are some of the strategies that you might be thinking that are valid now? Is it a long only market? Is it buy and hold now with this whole wave of money coming from the Fed? Is that the best strategy that you're kind of thinking, or is there some more actively managed strategies that you think are going to kind of prove to be a little bit better?
Yeah, that's a great question. I've been doing mostly just active stuff. I mean, as soon as this thing hit, I basically closed all my exposure, all my long-term. There's just so many things that we don't know about the future that it's very difficult to be making any kind of predictions about the future, what life is going to look like in a year from now, in 2 years from now. We can probably assume that in 5 or 10 years, things will kind of be the same, but will they really? We don't know, because of all the stimulus, right? And that's really the wild card that's going in there for the long term. So what most of the big players are doing, I'm talking about, Howard Marks and Warren Buffett and those type of people, they're just kind of sitting on the sidelines for now and accumulating capital. And they're just waiting for that bigger dip. They're just waiting for that, something to come along, and then they'll be able to pick up massive amounts of shares for very cheap. And that's kind of usually the way that you play, a major downturn in the markets. But we are, kind of in unprecedented times right now. It's not like a normal bull bear cycle. This is something that's completely different.
Yeah, absolutely. One of the things we really try and warn new people to crypto about is getting involved in actively traded funds or letting someone else manage your money. More often than not, they end up being scams like BitConnect that they end up falling into. Do you know any actively managed funds or trading products that are available to the retail consumer that are really legitimate?
Yeah, so because quantum economics is quite new, this part of our business is still under construction. I really want to do it right. I have a portfolio manager's license in the European Union, and definitely going to be putting that into play within the next few months. I want, but I have very specific things that I want. I want something that can be open to everybody, to the general public, something that people can enjoy and participate in. They can understand what the risks are involved, but also that we'll be able to invest in many different types of assets, so not just crypto, but also traditional markets, public equity, private equity, as much as possible, because I firmly believe that the road to success lies in diversification. You need to split your investment into a million different pieces, so that you're not exposed to any one. Um, but that said, I mean, for now, what we're doing is actually, I have an account on eToro. I'm not sure if you're familiar with eToro. It's the yeah, you are good. I was actually the senior market analyst at eToro for about 7 years. So that was what I was doing before quantum economics, and I've opened an account there, which is crypto trading only. And so far, I'm outperforming Bitcoin, which is not too bad. Um, and right now, as of this morning, was about $90,000 under management. So it's a good start. My 5-year goal is to have $1 billion under management. So we'll get there.
No, that's an awesome goal. I definitely think that kind of as the world wakes up to Bitcoin, there's going to be just a whole wall of money that really enters. I think about, I think I have only told this story once before during the summit, but I'll tell it again in case anybody missed it. I had a buddy who's been a good friend for years and years and years. And he's known me as the crypto guy. I wrote a book on crypto and we have the podcast and all that kind of stuff, but he was never like, I'm going to buy crypto. I'm going to, it didn't make sense to him. He's a smart guy, Stanford PhD, very smart, understood the math and the security and the technology, but I just don't think that it's going to have a value. It's so small. Nobody uses it. It's like, so he had all these refutations, right? And finally, it was like the second week of May. And he gives me a text and he's like, yo, I finally bought Bitcoin. I bought $5,000 worth. And he was telling me why. And then the next day he texted me again. He goes, I actually bought $5,000 more because I'm that convicted of this technology. So
wow.
$10,000 from going from 0 to 100 real quick. And I asked him, like, what put you over? What was the defining moment? And he goes, well, you would talk about, back in the day when we would get together, talk about crypto, you would talk about the Fed and how they're debasing the currency. You would talk about how all that stuff is in theory what's going to happen. You're going to inflate my savings away and you're going to do all this. And well, who's going to pay it back? And he's like, it was all to me theory. But when it hit after COVID and we saw the Federal Reserve response and you start to realize, oh my God, there's all these freeloaders that are getting free money. Everybody, they're not freeloaders, but they're just saying everybody's going to get free money, which is like,
That's right.
Where's that money coming from? How do you kick the can down the road? And so he had a very gut level feeling that was like, wow, where is this money coming from? And that's what caused him to buy Bitcoin. So I just think that, like, at this time, how many other people around the world are currently waking up to something that you've been preaching for 10 years, right? Like, here it is, finally.
Exactly. Like, that was exact thought process that went through my mind in 2013 when I first heard of Bitcoin. Finally, we have an escape from all of this that the Fed is doing. I did totally understand where your friend is coming from. And I'm just, it's just the way that it's just been interesting watching the world go back and forth on this, right? And go, because I'll never forget the summer of 2017. And, my family knows that I'm into Bitcoin and I went to visit them. And they, like, some people were genuinely interested. Obviously, the price was skyrocketing at the time. But my family was into traditional finance, and they're just like, I'll never forget my grandfather laughing, like, Bitcoin, ha 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 ha, right? Like, and 6 months later, I came and visited again. So how's the Bitcoin thing going? Like, all of a sudden they're seeing it like as a they're seeing it like as a very serious thing. They're seeing it as like something that like they'd never heard of. And the first was first they laugh at you, right? And then they fight you. And that was exactly what was, I saw my family going through those kind of stages, or the 5 stages of acceptance, I guess. We'll see how it plays out. I just think it's quite interesting watching the entire world go through this whole thing. I don't understand why in 2013 the media was like so for or against, back and forth. To me, it was just like immediately, okay, we have an alternative. There's a new kind of money. It's internet money. Let's start using this right away. And it took everybody else a while, but it seems like they're finally coming around.
It does. And because of so many people are coming around, so many institutions are coming around now, how do you see the Bitcoin landscape going forward when there's going to be a lot of Bitcoin supply in the hands of professionally managed companies as opposed to people that were looking for an escape from the financial system? Is this an infiltration of our industry, or is this going to grow it to a next level? How do you see the next few years playing out as new players enter the tournament?
That is a good question as well. I mean, you guys are good. So this is basically a question that has been debated in the community for, since 2017. In April 2017, I went on Bloomberg Television in 2018. Told them the last wave of crypto adoption was from retail investors, right? People who felt they had no choice but to take a bit of risk with their savings. But the next wave is going to come from Wall Street, right? Wall Street missed that entire wave, and they're going to be responsible for the next one. We saw a bit of that in early 2019, especially with Libra and Backed and all of that excitement. And then somewhere along the line, it got derailed, probably had to do a lot with, with Libra completely deteriorating in front of everybody's eyes. And probably the Wall Street community was like, wait a second, maybe we're not so sure. And then, the regulators started coming in and cracking down on the whole crypto space. Is it a good thing or a bad thing? I don't know. Yin and yang, my friend. There's good and there's bad in everything. I feel that Bitcoin's design is sufficiently robust that we don't really have anything to fear from these new players in the market. Anybody who's holding already, you're not going to see the value of what you're holding erode from this, but rather the opposite. I think that they'll have a way of sucking the liquidity, which will make it more difficult for newcomers to enter the market. It's I don't think that it's going to end up festering or concentrating in the hands of the few, but rather we could see kind of a war among all of the big players, right? And what I've been waiting for is some central bank to come in and say, okay, that's it, we're putting Bitcoin in our reserves. It could take a while for that to happen. Russia is kind of like on the verge of that already. They could announce it at any point. Right. Obviously, they need to. There's just a few legal hurdles that they need to clear. But as soon as they pass a law that says Bitcoin is legal, they're good. They're good to go.
Yeah, no, I'm definitely waiting for, Putin's a big Bitcoiner. But recently we were seeing some reports that BitMEX is getting sued by the SEC. I'm not sure if you've had a chance to dive into those accusations or that court order that's getting floated recently. But what would be the ramifications of if there were no more BitMEX?
Well, I think that would be a good thing. BitMEX is a scam. Plain and simple.
Okay, fair enough. And is it because I know that they're liquid? It's I think the reason why it might not be so great is because it's back, like you put Bitcoin as collateral, and then when you're liquidated, it does, forced sell of Bitcoin. So it has constant sell pressure on the market. But beyond that, what's your qualm with it?
Sure. It's difficult to be a true libertarian sometimes, because on the one hand, you want to say, yeah, the government shouldn't interfere with this kind of stuff. But on the other hand, you have people like Arthur Hayes who are getting away with flat out theft from people who are new in the industry. Perhaps if there never was any type of regulation to begin with, people would be a little bit more aware of their surroundings and their environment and understand how to protect themselves. But I suppose because people have been sheltered and they've never had access to, they've never been able to go to a broker that was faulty, or those never existed before in any kind of big way. Now that it's happening, people are falling for it hook, line, and sinker. Leverage can be very dangerous for retail investors, and especially when you go to high leverage. I was at a broker one time in the Forex market who offered 4,000 times leverage. The broker gives you enough rope that you can hang yourself, and they're counting on it. They're counting on you hanging yourself. A lot of the time, they're not even going to take your position to the market. Why should they? If you're buying $1,000 worth of Bitcoin, they're going to put that $1,000 in your pocket, wait for you to lose your money, and then say goodbye. Right? They're not going to take their commission and pass that $1,000 onto the market. I very much doubt if BitMEX is doing that, simply because their platform is designed to be a game, and that game is designed for people to lose money. And it's unfortunate that the government needs to be the one to step in. Perhaps if the crypto market would, the influencers within the crypto market would stand up and say, hey guys, 100x leverage is a scam, then exchanges would be less likely to actually do it. And now, you have several other exchanges, Binance and Huobi, and all of them saying, oh yeah, we've got 125x now. Like, come on, really? What you're doing is dangerous for people, because people don't understand that, people who are coming from a regular background and they don't have a traditional finance, they don't understand that this is a game, or that this is equivalent to gambling on. They think that they can actually make money from this, and the truth is, you can't. It's pretty much impossible at that amount of leverage to make any kind of returns on a consistent basis. So yeah, it's mixed feelings. On the one hand, I'm happy that somebody's cracking down on them. On the other hand, I'm not so happy that it has to be the government to do so. I think that we should have been the ones to stand up.
Yeah, I definitely agree. It's really unfortunate that people would rather gamble than invest. And that is a problem. I mean, that's why the SEC exists in the first place. That's why there's all these accreditation rules. It's because they don't feel that people are educated or responsible enough to not get taken advantage by the sharks and lose their money. And while I'm as anti-government as you are, they have a point. They really do have a point. Now, it would be great if there were lower barriers to entry to become an accredited investor. For instance, basing it on education or some kind of certification or registration rather than net worth. But the actual SEC commissioner has proposed those changes to update the rules for the first time in 70 years. He says, me and my staff here, we know more about securities than everyone, but we can't qualify as accredited investors, and it's about time that we relook at things. So I'm really, really bullish going forward. When those rules take place, I know there's also some legislation and bills that are being proposed right now to further define cryptocurrency versus crypto security versus crypto utility, and assign those different digitalized assets to the proper government bodies. So the SEC won't have their hands on crypto utility tokens or currencies, which I think any kind of clarity, knowing the rules, is really, really important. I feel like not knowing what the rules are has stifled innovation in the U.S. more than anyone, because around the
Yeah.
world, no one wants to deal with the U.S. because they don't want to be in trouble later.
Yeah. No, all of the crypto projects that I'm advising, most of them come to me and say we don't want to touch the U.S. And the ones the ones that don't tell me that, I'm the one telling them that, by the way, you don't want to touch the U.S. You don't want to go there, because you don't know what's going to later on become clear that you were stepping over the line somewhere.
Really fascinating. One last question I kind of want to leave us all with. How do you kind of think about Bitcoin's total addressable market? I was having a conversation earlier, and it was around the idea of, people are chasing yield right now in this kind of environment, and it's hard to conceive of getting a 2x return on your Amazon, right? That would put this thing at a 2 trillion or $3 trillion market cap, but you very well could see the price of Bitcoin double, triple, quadruple. That's like very well within reach because the market cap of it is so small right now. And the total addressable market is maybe the market cap of gold, maybe the market cap of M1 money supply. How do you think about it?
Yeah, well, M1 money supply, I'm not so sure about that. Probably somewhere somewhere between the market cap of gold and that. Um, I don't think that Bitcoin could completely replace the US dollar, for example. It's simply not designed to do that. I don't think that any alternative crypto could do that either. Um, the way I see it and the way I've always seen it is coexistence. And I took a class with a professor of the Hong Kong University, who explained very clearly China's strategy regarding the renminbi, and their home currency. What they want from it is not to be a replacement to the US dollar, to the euro, but actually to be the third leg, as he called it, because he said right now the world is standing on two wobbly legs, which is the euro and the US dollar. And if we provide the renminbi as the third leg, that will prop up the world economy and make it more stable. And the way I see it, Bitcoin is the fourth leg, right? It's something that is completely independent of the other three currencies, and has its own complete ecosystem that people can jump back and forth between that system and the new system. The potential is I believe is greater than that of gold, simply because the market can be bigger. The market is everybody across the world. Now, obviously, everybody can buy gold as well, but I feel that in the digital age, people don't have that propensity as much to go after something or covet something that is physical. And the idea of coveting something that is digital seems to resonate a lot more, especially with the millennial generation. So there certainly is the potential to surpass that of gold. But I mean, as an investor, I carry both, and it's been a wise decision over the last few years.
Yeah, it's been cool to talk to a lot of Bitcoiners and see how much of them are actually, ex gold bugs or still are gold bugs. It seems like there's a really big overlap there. But anyhow, thank you very much, Mati, for joining us today at the Crypto Hedge Fund Summit. We're really, really pleased with all the analysis that you put out. Your Twitter feed is really awesome. You guys got to check it out. And yeah, we'll stay in touch.
Definitely.
And where can we go to sign up for your newsletter?
quantumeconomics.io.
Perfect. We hope you get a big lift from all the thousands of people that are tuning in today.